Kyle, good to see you. We are talking about the headlines today. As you know, interest rates are staying high, but we're going to talk through how to make them work in our favor. For several months now, the Fed has decided to leave interest rates unchanged. For the most part, this is not great news for borrowers, but it may offer some unique opportunities for savers. So how can retirees and pre-retirees leverage those high interest rates to their advantage? What should they be considering when it comes to savings and investments?
Hey, Erin, it's good to be with you. I think this is a great topic in today's world because a couple years ago, we were looking at interest rates and saying, well, yeah, they're going to come up because we have to slow inflation. But at some point, they've got to come back down, right? And at this point, it's looking like they may be up higher for longer. So now's a great opportunity to look at your personal balance sheet, look at what you've got in assets and then what you've got in liabilities, your debts. And right now, one of the big ones is credit card debt.
Right.
You could be paying up to 25% or more or higher in some cases on your credit card debt. And an example I like to use with clients is if you've got $25,000 in credit card debt at 25% interest, you're paying $520 per month just in interest. So on a retirement budget, if you can avoid that, it's definitely in your best interest. And then on the saver side, now that bank money, the lazy money, like we like to call it sometimes, you should be looking to target about a 4 or 5% interest rate on money markets, CDs. It's there. I know we've gotten used to the 0% environment, but that's not the case anymore. So take advantage of that now.
Yeah, our lazy money's finally working for us. Good point, Kyle. So are there any specific types of savings or investment vehicles that retirees should be considering that are, really attractive in this high interest rate environment?
For sure. I mean, I think that annuities, T-bills, those have kind of caught all the rage. Money markets and T-bills have caught all the rage lately. But for us, what we're looking at are fixed indexed annuities. So these are actually, believe it or not, they're interest rate sensitive.
Right.
And in our case, we like to use that to create income for our clients. So we like to create what we call almost like a personal pension for our clients. Most of them have safety of principal built in. And they can be a good fit in a retirement plan when they're appropriate, especially on the income side. And right now is a great time to look at these.
Yeah, billions are being poured into annuities right now. I think a lot of people recognize what an attractive offer they have. So, Kyle, then should retirees hold off on big purchases right now if they can't buy it outright? How are you helping people distinguish between good debt and bad debt?
This is an excellent question. We have had this conversation a lot of times here recently. I mean, mortgages, you could get a mortgage for less than 3% on your interest rate on your mortgage a couple years ago. And now all of a sudden you're 6.5 or 7, and it feels like a big jump. But, you zoom out and you look at the last 100 years, that's pretty much the average rate that people have been paying. So it's not out of the realm of what's reasonable. But we like to look at things being good debt and bad debt. Like you coined earlier. Good debt, that's stuff that builds your net worth or can create income for you. Bad debt is when you're taking out money, you're borrowing money to pay for a depreciating asset. So motorcycles, RVs, stuff for the house sometimes, that can be bad debt. And if you get on the wrong side of that, we talked earlier how expensive credit card debt can be. But now's not a terrible time to look at what could be good debt. You just have to make sure that it fits into your plan and you work with a professional to kind of look through some of the angles that you may not be thinking of.
Of course. All right. Well, again, Kyle, since we still don't know when those interest rates are going to be coming down, if somebody would like to talk to you more about annuities or other guaranteed streams of income, how can they reach you with questions?
The best way is through our website, firstcoastfinancialgroup.com.
All right. Perfect. Kyle, thanks for your time today.
Thanks, Erin.